Well, the Great Recession has changed the way Americans view home ownership. What used to be life's goal for millions has become something now that many are putting off for fear that they might lock into a home, and a home that one day they may not be able to afford. Joining us in this segment is real estate developer, investor, and CEO of Rapid Realty in New York City, Anthony Lolli. Also on board, Charles Steindel, a former executive at the Federal Reserve Bank of New York and resident scholar now at Ramapo College. And sticking around, political science professor Alain Sanders from St. Peter's University. Gentlemen, welcome. We have seen a lot go on in the housing industry, and let's go back to the Great Recession. I think a lot of the young kids who saw their moms and dads struggle through that are now saying, what do I need a home for? It's a albatross around my neck. I may not be able to afford it. The economy could crash again. Anthony, you probably talk to these people in this age group all the time. Is that what they're saying?
It's what it is. It's commitment phobia. We talk about it all the time. People don't want to own. They don't even want to own a bicycle. They don't want to own an album. They'll buy a song. It's really that way, and they don't know where they're going to be working next year.
So it's that generation, or did they see what happened in the Great Recession?
Well, they saw that. They saw that the equities appreciation rate is on the negative, and they don't want to get involved in pouring their money into something that's not going to be an asset.
Well, we see a great market right now with interest rates as low as they possibly can be. There are houses out there that we had, some of them foreclosures. That may be something that's attractive, don't you think so?
Oh yeah. Oh yes, certainly. Housing sales are starting to expand again. Prices are starting to rise. I agree with everything that's been said about housing is less attractive as an investment, but these things change over time. You see that a lot of the people who are in the cities now, they're getting married, they're having children, they're thinking, I need more space. I got to go out to the suburbs, got to get that house. And that's beginning to happen now.
Well, at what point, I'll throw this out to the panel, do those young people say, you know what, maybe I do want a home. Maybe I do want to take the plunge. Maybe I don't want to live with four other guys or with my wife and somebody upstairs. At what point do you come to that?
I think when you start to be thinking about having a family. I think when you
start. And there's no rush for that in kids now.
No, there's no rush for that, but that moment comes. Everybody has a different moment, but when that moment comes, I think that's when you start to look for more stability, more community, and where do you actually want to raise your kids? Do you want to raise your kids in an apartment that you're sharing with four other people, or do you want to raise your kids in a home with a spouse and a good school district? So I think part of this is a generational factor. That is, young people want to enjoy life while they're young. That's totally understandable. But when you start to think about family, I think the whole perception changes. You start to think about a 401k, you start to think about a home, you start to think about schools, everything changes.
Now, Anthony, your primary business is apartment rentals.
Yes.
So your business is going very well at this point.
It's booming.
Now, do you see a trend possibly where folks in apartments are now saying, moving out more frequently because they are buying homes? You're seeing this evolve as Alan just explained it?
Well, when we're talking about people in their late 30s and early 40s, when they're having children, they're now realizing they don't need the backyard because the kids don't play outside anymore. It's all on the phones and video games and chat rooms and things of that nature. So I'm seeing the condo market booming now. So when people are considering buying, they're buying a 1 or 2 bedroom condo first.
Now, why is that? Because it's cheaper and it's more manageable?
Well, it's more manageable. It fits their lifestyle. They don't have to commit to anything. There's a lot of amenities now in the new development properties that are out there.
So you're talking about rental condos?
Well, rental condos, yeah.
All right, so you make a very good point because kids generally don't play outside and they don't need friends to find in the street to play softball or stickball or whatever the case may be.
Yeah.
So that's what you're saying. So will you think this will continue? I
think it's going to continue. I think the banks are lending. They're loosening their purse strings a little bit, and they're offering opportunities, and 3% down is back. And I even see some interesting programs even for people on Section 8 where banks will lend to the Section 8 folks to buy the home that they're renting in.
Charles Steindel, you've been involved in the Federal Reserve many years. Have you ever been to a point where it's been this good to buy a home?
This is really a great time to buy a house. Maybe a year ago it was even better, but it's really good now. All the affordability indexes are up there. The ability to buy a home is as good as it's ever been, I've ever seen in my career.
So why aren't more people buying homes?
Part of it is, of course, there's problems getting financing. The banks are still running through the new regulations since the financial crisis. Terms are easing up, but they're not back to where they were. You no longer can, go online and get a mortgage in 30 seconds from over the internet like you could 10 years ago. Now you have to fill out a lot of forms, do a lot of justification, a lot of documentation. You have to figure out the process, and the banks are figuring out the process. The borrowers are figuring out the process.
Well, how do they make it easier for young kids to go through this process? I know what you're talking about. If you want a home loan now, or even want to refi, what used to be a no documentation and the money was there the next day and you were on your way, that doesn't happen anymore.
Except that try to get an apartment in New York City, a rental apartment. You also
True.
have to give your whole life away to people who look into your privacy in ways that would have been unheard of years ago. So I think this is part of the process, and unfortunately, it's also part of the fact that we don't trust each other as much as we used to for a whole host of reasons.
You bring up a very good point. Yeah, that whole system where it was trust, credit card companies and banks would lend you money, and there was trust that we saw the foreclosure wave. People just walked away. The banks are leery. Young kids don't want to get involved in it, or the investment is scary, or the process is too difficult to do. You own a couple of apartment buildings, or more than a couple, in Brooklyn.
Yes.
Are they filled to capacity?
They're filled to capacity. There's a waiting list. As an investor, you really can't buy any homes. Things are trading now at a 2.5, 3 cap rate. So as an investor, it really doesn't make sense. So we're looking at further and further out, or far away from the boroughs to invest. But in the inner boroughs, it's just very tight. There's a waiting list.
One of the things that could make things worse is raising the interest rates. We saw Janet Yellen just this week saying she's considering raising rates possibly later in the year with the approval, of course, of the Fed board. But we've heard this story before. I remember all the pundits at the end of last year saying we're definitely going to have an interest rate hike in June. Didn't happen. Now it's September. What happens when that does happen, and do you see an interest rate hike this year, Charles?
I think there's a good, I'd put it about a 50-50 chance as an interest rate hike this year, probably December. If not, maybe they'll wait till January or February. I think what happens is Bill Dudley, the president of the New York Fed, says that would be a good sign. That would mean the economy is going great guns. And for buying homes, it means, it's sure the financing costs will be higher, but people's incomes are going to be higher.
But
so I think it's pretty much it's close to a wash in terms of buying houses.
Wandering away just a little bit, wouldn't that put a shock into the stock market?
No, I think the stock market is, by that time, the stock market will be well braced for it.
Does everybody agree with that?
Well, I think what it does is just it stimulates the home buyer economy. All of a sudden, the mortgage brokers and the realtors are saying, hurry up, make a decision. Rates are going up, it's going to be more expensive, so people start looking.
Now, I spoke with a personal finance person this week who's plugged in, and he says there are going to be no interest rate hikes because the situation overseas is still too volatile. World economies are not doing as well. Greece is an example, about ready to pull out of the EU, and that sort of spooks the Federal Reserve.
Sure, it's spooked it right now. It's spooked it right now, but we're talking 5-6 months from now. Who knows what's going to happen then?
Well, when you were at the Federal Reserve, did they watch what was going on in the world economies? Some of it was before the European Union, some after.
They watched everything.
They did.
They watched everything all the time. Maybe sometimes you think too much detail, but believe me, they watch everything.
Alan, will any of this be part of the political campaign upcoming, do you think?
Well, I'm not sure that the actual economic details will be part, because I'm not sure the electorate understands that, and I'm not sure candidates want to speak in such great detail. But sure, the general economic situation, the income gap, the wealth gap between the very rich and the average American will come up, and you'll see the proposals coming from both the Republican Party and the Democratic Party as to how to equalize income. That's a really big issue, and I think that's one of the big damping factors on the economy, that many people might have a job, but they feel poor, and they see the ultra-rich pretty much doing everything that they can.
All you have to do is turn on television, see the reality shows with ultra-rich people.
So, I mean, the economy in that sense, the wealth gap will be an issue.
Who does it benefit and who does it hurt if interest rates go up in December or go up in 2016, the presidential election year? Does it help the Democrats or Republicans?
Well, I think it probably will hurt people who lean Democratic, because anything that makes things more expensive make the lower income population find it more difficult to live. So I think if the interest rates go up, you'll find a lot more screaming on the Democratic side than on the Republican side.
Do your clients ever talk about the economy when it comes to that, or are they just looking for a good apartment?
Well, they're just looking for a good place, but they're shell-shocked at the amount of square footage that they have to pay big bucks for. And it's always, do I rent, do I buy? But they don't have the down payment. And then you have to walk them through the home buying process. It's very confusing now.
What does it say to you that they have the ability to pay the monthly payment but don't have the savings for the down payment?
Well, it says they're not making enough, or they're not saving enough. I mean, I think everyone's credit scores were affected by the recession. Credit lines were diminished, which affected your FICO, and FICO is everything to a bank when you're going to get a loan.
Are any particular cities good for apartments? You mentioned Manhattan. I know you can't get one. They're so damn expensive.
You can't. I mean, Brooklyn's still interesting. Staten Island is booming now with all the development going on in the waterfront, so that's a place to keep on the radar.
Now, this is fairly local, but let's stay in New York for just a moment, if you don't mind. The rent control laws have expired. What does that mean to the average renter in New York City?
Well, it means that they're subject to fair market value, and a lot of folks, that could be 2 or 3 times what they're paying right now.
And will that happen, or do you think there'll be some sort of an agreement?
I think there'll be some sort of an agreement, but I think that these popular websites like Airbnb, you know, they've found that some of the folks that are living in rent-stabilized and rent-controlled units are subletting them and making tens of thousands of dollars. Now, this is not on the mass scale, but, you know, those things kind of upset landlords a little bit.
So, to spread out, you cross the river, go to New Jersey. You can't swing a cat in North Jersey without seeing a new apartment development going up. They've had over 5,700 units permitted the first 4 months of this year, which is the best start to a year in the 20 years at least.
I think we have some video here of an apartment building going up on a daily basis. I hope they show this here because it's fascinating stuff. You mentioned, I see apartments going up, especially just on the outskirts of New York City, which is is the biggest city in
along
America.
the Northeast Corridor, the Northeast Corridor rail line. Every town you see apartment developments going up.
What other cities are you seeing this?
Well, Jersey City is obviously
I mean,
big.
besides the New York metropolitan area.
Besides the New York metropolitan area, not that keen in the rest of the country. Obviously, the San Francisco area will be very strong, of course. Other than that, you think of the areas that are growing well. Certainly, there's some activities stirring in the Dallas-Fort Worth area, which got fairly heavily hit by the recession, but now starting to come back again. But I don't have a lot of great detail on the nation, but I think in the large cities in general, around the nation.
Anthony, you have offices coast to coast.
Yes.
Some of the markets where you're seeing some activity in the apartment arena.
Florida, downtown South Florida area, California, big booming development, rental condos.
Where specifically in those states?
Well, yeah, Brickell over there, Miami, South Beach, Brickell, Florida, in the South Beach area. Okay. Yeah, booming. A lot of foreign capital coming into these areas, and it's a stable economy, good job market, a lot going on, vacation, and just for permanent residencies.
What about the west coast of Florida?
A little bit, but not as much as South Florida.
If you had to, gentlemen, I'm sure you dabble, or you may not, in investments. If you had to dabble in a market that you thought might be coming up in the United States, where would you put your money?
I'm not knowledgeable enough on that, but I think any urban area is probably a good bet because we are an urban society, and all the regions that have been mentioned are urban areas. So invest in urban real estate. I think that's probably your best bet.
You know, you make a good point for a lot of discussion about the Midwest and the smaller towns. A lot of those young people who grew up there are moving out. Yeah. And they're going to Brooklyn, and they're going to South Florida and going elsewhere.
That's where the job is, that's where the action is, that's where the society is. And so that's why you find these real estate markets overpriced, because everybody wants to live in these urban environments.
Well, we want to thank you, first of all, CEO of Rapid Realty, Anthony Lolli. A pleasure having you on, as usual. Charles Steindel, thank you very much. We appreciate your expertise with regard to what's happening in the Federal Reserve. And also, of course, Alain Sanders. We thank you so much from St. Peter's University. When we come back, that big Pacific trade deal survives a bumpy ride in the House as the president deals with defections within his own party. We'll be right back.